Should family loans be used to start pop-up drink stands? Yes, family loans can be a smart way to start a pop-up drink stand, as long as both sides agree on clear terms in writing before any money changes hands. Think of a pop-up drink stand like a tiny business experiment, and family loans are often the easiest first step because banks usually will not lend small amounts to someone without a track record. When you borrow from family, you skip a lot of the paperwork and interest rates that a bank would charge you, which means more of your earnings stay in your pocket. But here's something a lot of people do not think about. Family loans can actually help you build real credit habits early, even though the loan itself will not show up on a credit report. You can treat it like practice for real business borrowing later on by setting up a simple payment schedule, maybe paying your aunt or uncle back $10 a week instead of one lump sum. This teaches you budgeting before you ever deal with a real bank. Another thing worth knowing is that some families actually treat these small loans as informal investments, where the lender gets a small percentage of profits instead of flat repayment, which can feel more fair if the stand does really well. One big caution is mixing money and relationships without clear boundaries, so always write down the amount, the repayment plan, and what happens if the stand does not make money, even if it is just a simple note. Another key point is underestimating starting costs like cups, ice, and permits, so create a small buffer of about 20% above your first budget estimate. Lastly, many people forget that some cities require a permit even for a pop-up stand, so check with your local city office before you set up, so you are not shut down on your first weekend. If you enjoyed this video, check out our online directories in the description below.